Market analysis, Chris Weston from IG Markets in Melbourne. Chris, good morning to you. We're just remarking, Stephen Dooley, that the euro fairly resilient on the Moody's downgrade of Spain, but beyond that, what for you represents the greater challenge?
Well, I mean, it's the uncertainty. I mean, anyone who tells you, Carson, we know how this is going to play out in the next couple of weeks is lying. I mean, just no one really knows how this is all going to plan out. You know, the Moody's downgrade, I think, is probably worrying from the perspective that it's now one notch below what S&P have got, 2 notches below what Fitch have got, and it's still on review. So there could be another downgrade within in the next 3 months, which effectively would take it into junk status. So I think that's one thing that's got to be prepared. But if you look at the euro, it's actually rallied since the downgrade. So I don't think it's that big a deal. But I mean, obviously, if you look at what's happening on the Greek elections on the weekend, there does seem to be this gradual warming to what the expectations are going to be. Now, Mr. Tsipras, who represents the Syriza party, which is one of the markets really probably don't want to see gain power. He's been coming out boasting and suggesting that the European officials are probably looking to renegotiate terms. They're not going to kick Greece out. They're not going to the ECB and the Greek officials, the Troika, are not going to stop payments to Greece in any shape or form. And then you've got this this FT article in the Deutsche FT article saying that there is actually speculation that from officials who couldn't be named that European officials are looking to renegotiate the terms. Now, you know, that's a very interesting situation. It does seem that the market seems to be warming to that. There's other things that are bubbling away in the surface in terms of this European Redemption Fund, which people are saying what Angela Merkel's warming to as well. And then, you know, France are pushing for the ECB to come in, or France are pushing for more power for the ECB to do some sort of banking supervision and allow the ESM to have direct injections into the banks. There's stuff bubbling away. We just don't know if it's going to come out. It's all narrative. It's all rhetoric at the moment. We've just got to see it coming out, and hopefully one of these G summits, the one in Mexico, which the Mexican leader yesterday said would have this all-encompassing, you know, situation, and then obviously we've got the summit at the end of the year and end of the month as well to come out with. Not to mention the FOMC meeting on the 19th and 20th as well. So, yeah, there's a lot of speculation, a lot of headline risk. Hopefully, it's all going to come together in a melting pot, and we're going to get this all-encompassing package, which Merkel's going to stamp off as well.
You know that's not going to happen. How can you say that with a straight face?
Well, no, I'm not exactly. I've got my fingers crossed here, to be honest, Carson. But yeah, no, exactly. I mean, Merkel, everyone's been talking about a banking union. You know, David Cameron was talking about it the other couple of days. The European, most of them, 90% of European leaders are saying we need a banking union, we need a banking
union
government.
Is such a dirty word. Why do they keep using it? It's been tarnished and basically trashed.
Well, I mean, I still think, you know, Merkel's comments are still very, very clear about that side of things. We need to see a fiscal union. Wayne Swan will talk about it today, and I'm sure they'll all listen to what he has to say. But, you know, they need to see a fiscal union before Germany are going to come out and put taxpayers' money to work and say, you know, we're happy to stand behind this. You know, we need to see some sort of...
Honestly, what purpose is served by the Treasurer falling into line behind that happy talk? Really, just taking a step back, what purpose is served? What does it do? Does that really calm markets?
What, Wayne Swan's comments?
Yeah, exactly.
Not really. I mean, it will probably show that he's behind Merkel in some shape or form. But, yeah, I don't think anyone in the market's really... I mean, you know, with all due respect to Mr. Swan, I don't think it's going to be a major market-moving event, to be honest, to his views. I mean, everyone's looking at Merkel, and we know how she stands at the moment. We know her anchoring of expectations. She's still got to win this vote. I think the thing you've really got to look at the moment, Carson, is this European Redemption Fund. If there's anything that seems to be playing out at the moment, something that she's warming to, it is this Redemption Fund, where they're perhaps going to get back to the original view of the Maastricht Treaty, which was getting these debt-to-GDP levels down to 60%. Anything above that 60% level, they'll pull into this fund and effectively it'll be downpaid over the next 20 to 25 years. Very complicated beast. It's a lot more detailed than what I've just explained in 2 lines, but that seems to be one thing that Merkel is warming to. And some people, some of the investment banks I've been speaking to, like Morgan Stanley, have been saying this is a potential game changer for the euro over time, because this is Eurobonds light. So that's something, but I don't think Wayne Swan's comments necessarily are going to have a huge impact on markets. They are reactive, they're backward looking as opposed to anything new that the market needs to hear.
So it's back to balancing budgets, and somehow everybody finds themselves able to live by the rules. You're saying that whereas in the past everyone just binned the rules, now they're all basically devoted to them.
Well, I mean, if you take some of the comments we've seen about Spain's going to miss its deficit targets by some way, which are the comments we saw from Fitch and Moody's last couple of days, is, you know, there's still some way to go. I mean, it is about, you know, the IMF coming in and making sure that these countries continue to balance their budgets. I mean, that's the problem at the moment. We are getting away from that side of things. The fiscal compact that Merkel's pushing so closely at the moment is likely to be sort of renegotiated in some shape or form, especially in Germany. We're talking about Greece coming out and having less stringent austere terms. Spain needs less austere terms as well. Italy clearly needs them as well. So it's still anyone's game at the moment, but Merkel still wants to see a fiscal union, a fiscal compact, a balancing of budgets, and before anything else goes further than there. So, yeah, I think there's a lot of rhetoric at the moment. We're still a long way from really getting a definitive answer to this whole solution.
Best summed up, probably in 4 words: blind leading the blind. Anyway, let's talk, shall we, briefly about how all this plays out on our market. Investors there, wherever they're watching, want to know, what do you do when you are looking to a session on the street that was pretty much no one was in the market, probably bar the computers? So how do you get around that today domestically?
Well, I mean, I can only speak from a trading capacity. You know, I'm not looking at investments in this market right now because, you know, we really don't know how this all could play out. I mean, we are looking over the abyss at the moment, but hopefully that's not going to happen, and hopefully things will get sorted out. And if that's the case, then fantastic longer-term buying opportunities. From a trading capacity, though, Carson, these markets are range-bound at the moment. I mean, you've got people who are sitting on short positions, closing out shorts ahead of the Greek election, hoping that, you know, worried about things happening that could cause some relief rallies. At the same time, you don't want to take any big long positions in case something negative goes on. So I think you're seeing range trading, you're seeing range in the euro, you're seeing ranges in the Aussie dollar, 98 to a parity mark, and that's exactly the same with equities at the moment. There's just no direction, no impetus for the bulls to push this market up, no real reason to be, like, you know, putting on big short trades and say something does come out over the next couple of weeks. So yeah, it's just I think it's, to be honest, it's really just sit on your hands at the moment, because there will be, it's about reacting. It's not about prophesizing in this market at the moment, because, you know, because the implications of the next 2 weeks are going to be so severe, a trend in my mind will develop, and it's, you can buy into the strength or you can average down into the weakness, I think.
Well, if that helped people out, all credit to you, Chris. Thank you so much. You could best summarise that as sit on the fence. Thank you. Have a good day.
Yeah, well, if you know how this is going to go, Carson,
wouldn't be ever so brave as to even half pretend so. But listen, as you've underscored, who could? Thank you, and have a good one.
Thanks.